Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about a very old company which is listed in India for a very long time. And this is one of the market leaders in the battery manufacturing area in India. It is now transforming itself from just a battery manufacturer into the entire new energy ecosystem. It is Amara Energy and Mobility Limited. Before we move forward, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. This is a small disclaimer. As per SEBI regulations, you can pause the video and read it. This will be the flow of our discussion. We'll speak about the business model of the company in brief. We'll look at the chart. We'll understand the financial performance in the last 5 years. We'll discuss why the stock has given a sharp correction from the highs. We'll look at the outlook of the management going forward. We'll understand the valuations of the company, the risks involved in investing in this business, and then form an overall view. I'll try to keep this video very short and try to cover all the important points in just about 10 minutes. So Amara is a 4-decade-old company. They are a leading manufacturer. In fact, the second largest manufacturer of lead acid batteries in India. Their batteries are sold in the automobile sector as well as the industrial sector. And now they are transitioning themselves into the new energy segment. They are manufacturing lithium-ion batteries, packs, EV chargers, etc. When we talk about their industry business, in telecom industry, they are the market leaders in the lead acid batteries and also leaders in the data center industry. As you know, in a data center, it also needs a proper power backup. So there, Amara is the leader. It's a technology-oriented company developing new products every year. So they were the first ones to develop the AGM battery in the two-wheeler segment, the first ones to develop the VRLA batteries. They have 12 manufacturing units spread across India, and in terms of capacity, they have 65 million battery manufacturing capacity in a year. In their industrial batteries, they have 3.2 billion AH, which is ampere hour capacity. They export to 60 plus countries, and they are now focusing on further extending their export business. They have more than 11,000 people working with them, and they also have a JV with Johnson Controls for 2 decades. This is the broad organization structure. The parent company is Amara Energy and Mobility Limited. It has 4 subsidiaries. The first one is the Amara Batteries Middle East, which is mainly used for marketing their products in the Middle East region. The second one is the Amara Circular Solutions Private Limited. This is for the lead recycling business. So these 2 subsidiaries are into their traditional business and the other 2 are into their new energy business. Amara Advanced Cell Technologies, this is the subsidiary in which the new lithium-ion cell manufacturing is coming up, and the fourth one is the Amara Power Systems. In terms of their product segments, in their first traditional business, the lead acid batteries are used in automotives. In automotives for all kinds of vehicles, that is 2-wheeler, 3-wheeler, 4-wheelers, and the larger vehicles as well. Then it is also used when we install inverters or UPS in our homes and offices. They've also started a lubricant business recently where they are not manufacturing, but they are getting it made and selling it in their own brand. In their industrial segment, the lead acid batteries are used in telecom, UPS, also in the renewable energy railway segment. In the new energy business, which is the lithium-ion batteries, these battery packs are already developed for 3-wheelers and 2-wheelers, and they are under development for the 4-wheelers. They are also supplying this to the industrial segment. They have started selling EV chargers and installing and maintaining them, and their cell manufacturing capacity is going to come up in the next couple of years. In their lead acid business, these are their popular customers. In automotive, we have all the big names here, Maruti, Tata, Hyundai. In the industrial segment as well, we have big names like ABB, Schneider, Airtel. In the new energy business, there are big names joining them again, which is Mahindra, Piaggio, Industars. So this is a broad understanding of their business. Now, coming to the stock performance, the stock was in a long consolidation from 2015 to almost the COVID time. And the last, it made a high of somewhere around 1,000 in the last 5 years, that is from 2015 to 20. But post the correction in COVID, when it got a fresh rally, it made a high again of the same range of around 1,000. And then it witnessed a correction up to the 450 range. So you observe that the stock has a tendency to remain in consolidation for a long period of time, and it is also has cyclicality in their business. From that correction of 450 rupees, which was in 2022-23, it gave a sharp rally up till 1700 rupees. And then we again saw profit booking because of the weaker results, and now it has taken support at the 900 to 1000 range, which is a very strong support in terms of technicals as well as in terms of valuations. So at this range now it is building a good base. One strong trigger of good earnings can cause a breakout on the charts. Now, if we look at the revenue trend in the last 5 years, it has shown consistent growth in revenue from 7,150 crores to 12,400 crores in the last 5 years. Although there is a steady growth in revenue, but the growth rate is not very impressive. It is already a very large business and one of the market leaders in India, and that's why it is steadily growing at a 5-year CAGR of around 13%. The growth in EBITDA, which is profitability point of view, the growth is in fact inferior compared to the sales. We see that they did an EBITDA of about 1100 crores in FY21, which went down to 1000 crores in FY22. This went up to 1625 crores in FY24, and in FY25 again we see a stagnation here. The reason for this stagnation and lower growth in profitability gets clearly reflected in their margins. They did an EBITDA margin of about 16% in FY21, which got reduced to 13% in FY25. The company gets about 15% of their revenue from their trading business. So these are the products like inverters, UPS, the lubricants, which they are not manufacturing in-house. The company is in a capex mode, and that's why the ROEs are not very impressive. They are around 12%. Promoter holding is already down to 32%, but it's a very strong cash flow generating company and converted almost 75% of their EBITDA in the last 5 years into operating cash flows. Working capital wise also it is managed pretty well. What is the reason for the correction in the stock price in the last 1 year? The EBITDA margins got impacted. In Q4 FY25, the EBITDA margins were as low as 12%. The valuations at one point of time became very expensive and those were not sustainable, so they got normalized. The business which they are now entering into, that is the new energy business, is also having tough competition with new players in India as well as the large Chinese companies. And overall, the market sentiment also has not been that good. That also impacted the stock price. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. It's a free channel. Every day before the market opens, I share my views on the market. I also share a lot of interesting sectoral views, portfolio allocation strategies, which can help you manage your portfolios better. More than 7,500 people are daily in touch with me through the Telegram channel, and I hope to see you tomorrow on my Telegram channel as well. Now, what is the growth outlook of the management going forward? There are really big initiatives which the management is going to take in the new energy business that they are entering. They are planning to launch a new gigafactory in Telangana for manufacturing lithium ion cells. And they plan to spend about 95 billion rupees in the next 5 years on this. Broadly, they would focus on the new energy business, expand the geographical presence of their old traditional business, innovate new products in the old business as well, and the margins which were compressed earlier, they will get normalized to about 14% in the next couple of years or so. These are some of the ventures or the capex which they are doing. So there is a tubular battery plant at Chittoor which is coming up. This is their battery recycling plant at Tamil Nadu. There is a customer qualification plant which is coming at Divitpalli. So whatever new products which they want to develop on the behalf of their customers, testing, prototyping, everything will happen at this entity. Their giga cell factory, which is coming up at Divitpalli in Telangana, this would be 16 gigawatt capacity by FY30. And at Hyderabad, there's a new venture again called eHub. This is for their new energy business, both for automobiles as well as non-automobile products. Now, when we talk about the Indian lead acid industry, it is right now at about 4.6 USD billion, which will grow to about 5.8 in the next 5 years. So there is still growth left in this industry, but the growth is not that impressive. Lithium ion demand is expected to grow faster. It is right now at about 10 gigawatts. This will increase to 100 gigawatt hours in the next 5 years. The EV penetration is expected to be 35 to 40% in two-wheelers, 60 to 65% in three-wheelers, and about 10 to 15% in four-wheelers by FY30. These are some of the lubricant products which the company has recently ventured into. Broadly, these are the growth plans of the company, which are quite impressive and massive. Now let's talk about the most interesting part, which is the valuations. Right now, the stock trades at about 20 times price to earnings, 2.4 times book value, EV EBITDA of about 10x and market cap to sales about 1.4x. So valuations prima facie look quite reasonable for this company. And if you look at the historical 10 years EV EBITDA, it comes to a median of about 12.3. So valuation wise, post the correction, the valuations have become pretty reasonable. Now, what are the risks of investing in this business? Due to the fluctuation of the raw materials, the margins of the business can impact it, which is happening right now. The lead acid batteries industry, which the company is largely into, roughly about 95% of the business comes from this, is kind of a business industry which is entering into stagnation in the near future because the new chemistries are getting developed, which is the lithium ion and other new ones. There are some issues with related to the power cost which the company is facing with the government right now, which is impacting the margins on a temporary basis. The promoter holding overall is low. So if the company wants to raise fresh funding for their new ventures, the promoter holding might get impacted. The new ventures which the company is planning to do, which is in the lithium ion cell, that also has global competition with massive Chinese players. The technology in the new energy industry keeps on changing. So the company has to adopt to that technology as quick as they can. They have announced massive projects, but execution of these projects, timely starting those projects, developing suitable products, selling them, penetrating the market would have a lot of execution risk. So overall, this is a broad understanding of Amaraja's business, their growth plans, their financials, their valuations, the risks. Now, after understanding everything, what is an overall view on the stock? So if you're holding this stock from a very long time, you did not sell it at the top, then you should continue to hold because the base is more or less technically formed. And going forward, financials also are supposed to get better from here. And if you're looking at a fresh entry, this is not a very fast growing company. And the growth going forward also in terms of revenue would be between 10 to 15%. There would be slight margin expansion and the margins may get normal to 14% EBITDA in the next couple of years. Now the icing on the cake can be their new energy business. If they execute it well and that clicks, then that can bring in new triggers of growth. But if that growth is compensated by the degrowth in their traditional business, overall the growth will remain more or less between that 10 to 20% range. So if you are a very patient investor who can give this company 4 to 5 years of time and see how they are developing their new energy business, then this stock is suitable for your portfolio. But if you're looking at quick gains in the next 6 to 12 months, then that may not work out so well for this stock. So that's about Amaraja Energy and Mobility. I hope you like the crisp video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel by clicking the link in the description button. It's a free channel. Thank you for watching and have a wonderful day.